Ladies and gentlemen, good day and welcome to the CarTrade Q2 FY22 results conference call hosted by Axis Capital Limited. At this moment, all participants are in listen only mode. A question and answer session will be conducted towards the end of the session. At that time, you may click on Ask a Question tab and type your question. Participants on audio call may enter star 1 to ask a question. Please note that this conference is being recorded. I now hand the conference over to Nishit Jalan. Thank you and over to you, sir. Nishit, over to you, please.
I think
Hello.
Nishit is.
Yeah, Nishit, over to you.
Yeah,
You may
hi.
please go
Sorry.
ahead. Yeah.
Yeah. Sorry, there was some issue with my connection. Yeah, hi. Good morning, everyone. Welcome to Q2 FY22 result conference call of CarTrade. From the management team, we have Mr. Vinay Vinod Sanghi, Chairman, Managing Director, and CEO. Anisha Menon, CFO and Director, and Vikram Alva, Chief Strategy Officer. I'll now hand over the call to Vinay for his opening remarks, and he will take us through the presentation as well. Post which we can have Q&A. Over to you, Vinay.
Thank you, Nishit, and thank you for everybody for joining in this morning for this first investor presentation for the company. We really appreciate you taking the time out and spending the time out. Just before we go into the earnings, and of course we've uploaded it yesterday on all our earnings and the presentation itself, and I hope you all have a copy of the presentation. I'll just give you a little bit of a recap, on the business, on the strategy and the business itself. And Vikram, will you go to the next slide, please? This is something we showed earlier on, and it's also part of our document which we filed prior to the IPO. Is what are we looking to build? We are looking to create in India an automotive digital ecosystem. And then what we've been able to create over the last 10 years is connecting all the stakeholders to one digital platform. So, at the top, as you can see, all our brands, CarTrade, Valet, Bike Valet, where we have millions of customers covering every month and every day and every year for selling a vehicle or buying a vehicle. You might see from the data that 34 million people per month come to sell the vehicle or buy the vehicle on one of our platforms. That's a huge number. 34 million come, and 86% or 87% of them come organically, which means they come without us paying for them, which is one of the reasons why our company's got a very high adjusted EBITDA margin. So as I said, part of this ecosystem which we're creating is the brand of our platforms and the 34 million customers which come. Also part of this ecosystem is the technology and software we have created, where we've connected all the stakeholders, connected customers, dealers, manufacturers, banks, insurance companies, all onto one platform. So dealers can come in and buy vehicles or sell vehicles, banks can give loans or sell vehicles, manufacturers can sell vehicles, and customers, that I said, can buy or sell vehicles. So as much as we're a brand with 34 million customers come, we're a technology software company which connects all the stakeholders of the automotive industry onto one platform. But we're also one of India's leading places or destinations for automobile data. We auctioned last year almost more than, in the last quarter, more than 300,000 vehicles, which is almost a 1.2 million run rate. We have these 34 million customers coming. We also have most dealers in India on our platform, and therefore we're the largest warehouse for automotive data, consumer data, as well as vehicle data. So what are we looking to create? We're looking to create an automotive digital ecosystem with the core strengths being the customers and the brand, the technology and software which interlinks all these stakeholders, and the data which we carry in our warehouse. If you can go to the next slide, Vikram. And as I said, over the last 10 years, the strengths we would talk about is the brand, the platforms, the technology, the software, the data science, and the algorithms which we carry. We are a profitable business with an adjusted EBITDA margin of 28%. And of course, what brings all this together and all the strengths together and the foundation we have created the last 10 years together is the entire team at CarTrade Tech. Can you go ahead, Vikram? When we look at the strengths we have and what we've created the last 10 years, and look at the future of the company, and this slide is very critical to explain what we want to do over the next 10 years, 15 years. On the left is the consumer group, right, which is carries all our core businesses. The new car business, we can come and buy a new car. A used car, we can come and buy a used car. But we also have India's leading two-wheeler platform called Bike Valet, and we believe that's a strong growth area for the future for us. As many of you know, that the GMV on two-wheelers in India is almost equal to the GMV on new cars, and we believe that Bike Valet, which is one of our leading one of our faster-growing businesses, can become of certain scale and size over the next 2 to 3, 4 years. So really on the consumer group, we've got the new car side, the used car side, and the two-wheeler platform. But there's also a services angle for the future: car servicing, car repair, insurance. We haven't addressed this yet, but as we go on in the future, obviously we're looking at incubation or investments or acquisitions in the space of car servicing, car repairs, car insurance, so that we can enter the car services. All these 34 million customers we get every month required to repair their car or insure their car. So we're closely looking at the car services space. And then there's the remarketing side of our business, whereas as you know, we auction almost at a run rate of almost over a million vehicles a year, where we have these vehicles which are auctioned, are supplied by consumers like you and me, businesses. Businesses include banks which have repossessed inventory, insurance companies, dealers, fleet owners, etc., etc. So really, the consumer group and the remarketing group is what makes up our revenues and profits today. But we look at the future of the company over the next, 10 years, 15 years, and then we obviously want to get into other areas. Franchising is a big area we're expanding into, and we'll cover that in the presentation a little later, how we're making, digitizing the entire journey of buying a used car, and franchising is helping to do that, and we'll talk about it a bit later. CarTrade Finance, a big initiative, I'll talk about it a little later as well, where we're looking at all these 34 million customers getting a loan in a digital form on our platform today. And then the software service angle, all our customers, dealers, manufacturers, banks use our software for some part of their business or the other. Some of these businesses have taken our software internationally as well. So for example, BMW has taken our dealer management solution to their dealers in Asia. And then, of course, the new areas of investment, right? Electric vehicles, these are all new age businesses, ride sharing, connected vehicles. But if you look at us, really, we're a platform where at the core, our current new car, used car, remarketing businesses are driving all the growth and the profitability. As we look at the future, next 10 to 15 years, car servicing, car insurance, car financing, two-wheelers, software, all these become core business of the company, which will give us just a limitless opportunity to grow. It almost amounts to a $14 billion TAM for us for the future for the next 10 to 15 years. Can we go to the next slide, Vikram? You want to take this?
Yeah, I'll take this. Yeah. So as Vinay spoke to you about the businesses we are in, the businesses we are incubating, and the business we want to be into, the total revenue pool, or the TAM as we call it, is about 14.3 billion. This is not GMV value, but this is the revenue pool available to us. This ranges from vehicle transactions, after sales, service, accessories. Ad spends is a 1.8 billion revenue opportunity or TAM opportunity there. Auto finance is a 1.4 billion opportunity. The reason we are able to address or target this 14.3 billion opportunity is because of the strong brands we've got and the great amount of traffic they generate for us. Also, India is really poised to grow rapidly. We are poised to be the third largest auto market by 2025. If you look at the projections for new cars, new two-wheelers and used cars, they're going at 10% CAGR for the new car business, new car sales, going about 8% CAGR for new two-wheelers, about 11% CAGR for used cars. So huge TAM opportunity. The country is growing. We are supposed to be the third largest auto market in the next few years. A few small highlights about what's happened in the last 6 months. Obviously, COVID has hit us in the first quarter of this financial year. Between April to June, July, there were lockdowns, and therefore dealerships were mostly closed during these periods. The other big issue is, or the issue which is there, is the semiconductor issue and supply side issues right now. What we estimate and what we understand is these issues on the supply side of semiconductors, etc., should taper off by the end of this financial year. The large TAM, growing markets, and our strong brands will help us take us forward.
As we've talked through the last few slides are really about what we achieved in the last 10 years and then the future of the company for the next 10 to 15 years and how our strategy is based. As Vikram says, there's a huge TAM out there, and Also, the industry itself is poised to be the third largest auto industry in the world in the next few years. Coming back to this particular quarter and half one for us, how our performance has been. We are continue to be India's leading two-wheeler and car automotive plot portal, only profitable, adjusted EBITDA profitable, and as you can see from the FY20, which we had earlier shared as well. Vehicle agnostic, cars, commercial vehicles. Average monthly unique visitors 34 million in Q2. This is the highest ever we've ever reached, and it's a massive number. 34 million unique visitors per month. This is, and this is our last quarter average. What is more remarkable is 86.68% of these come organically. Organically means we don't pay for it, and it shows the brand affinity of the company itself and the platforms we have. Our auction volume is at an annualized volume of 1.2 million, which is also our highest ever numbers in Q2, which we achieved here. The run rate revenue has come to 3.5 billion or 352 crores, which is annualized for Q2. The profitability or the adjusted EBITDA is almost 97.8 crores on an annualized Q2 number. And the adjusted EBITDA margin is at 28% in Q2. So all our numbers are, you look at the traffic, you look at the number of users, you look at the number of vehicles auctioned, and our EBITDA margins or revenues almost, reached our peak in Q2 this year, right? Can we go ahead to the next slide? Anisha, you want to drill down on this?
Sure, I'll happily take this up. So as when I mentioned, we had an adjusted EBITDA margin at 28% for Q2. And if you look at the growth numbers, which is evident out here, the half year number for FY22 was at 150 crores as against 103 crores of last year, which gives us a 46% growth in revenue. On an adjusted EBITDA, we are at 33 crores as against 16 crores, which gave us 104% growth from last year, which is how and you can look at the Q2 numbers. With an 88 crore of revenue, we have a 24 crores of an adjusted EBITDA, which gave us this 28% margin. The only exceptional item which is there in this quarter and in this half year is explained by way of a note. It's exceptional, non-recurring, and a non-cash adjustment, which was on account of the ESOPs that were granted in this year. These ESOPs were granted with a vesting period of 1 year, which is an accounting entry, which is an entry that we need to pass as per the Ind AS standards, is to park that entry into our cost, which is why we've got this large cost, which you can see on the table below. There's a 93 crore cost in the half year and a 46 crore cost in Q2, which has resulted in a negative number. But I'd reiterate, at the adjusted EBITDA levels, we are definitely positive and we have great margins at 28%. We can move on to go ahead to the next slide. These are the numbers which will give you the consistent revenue and adjusted EBITDA growth that we have witnessed, be it Q2 versus Q1, Q2 versus Q2, or H1 versus H1. We have had 40%, 39%, 46% growth all throughout in revenue. On the adjusted EBITDA margin side, from Q2 to Q1, we had a 186% growth that we witnessed. Q2 to Q2 is 34%, and H1 to H1 is 104%. Vikram, if you could help me with the next slide. And in fact, would you like to take up the next slide?
Yeah. So as Vinay said, in this quarter, we've reached our highest ever average monthly UVs at 34 million. There's an 86.68% of this came organically. That means for 86.68% of our traffic, we don't spend a single rupee. This is a serious and big competitive advantage for us. Our UVs have grown quarter on quarter. If you look at from Q to Q1, we've grown about 28%, and we've grown about 21% in the organic part of it. Our strong traffic and most of it coming organic is a huge competitive strength for us. Google Trends also shows that we are leaders as far as online brand searches go. Google Trends is a really good indicator of how our brands perform vis-a-vis our competitors' brands. This graph is only for about 1.5 years. You can do this trend by yourself for the last 10 years, and you can see that we are way above our competitors. Even though our competitors spend money and they sometimes inch upwards, as soon as the advertising spends reduce a little, we've maintained a domination with them. They're about 1.5 times our nearest competitor, about 7 to 8 times more than our second nearest competitor in the Google Trends. That's on the cars side. On the bike space, we are a clearly dominant player with a Valet portal. The reason we've got such strong brand affinity is because Our brands are synonymous with trust, quality, reliability, and consumers love our brands. If you look at the auction platforms, we've reached the highest ever auction listing numbers at 3 lakh 671. Our annualized listing run rate is now 1.2 million. This is based on annualized number of Q2 FY22. As you can see, our auction listing numbers of Q2 versus Q1 has grown by about 42%. The same as with auction listings of Q2 versus Q2 is about 73%. Actually, Anisha, is that the right number? I am.
Yes, yes, absolutely right.
Yeah, because I couldn't see it very clearly out here. And we've shown consistent growth on our auction listings and auction sales volume.
I want to talk a little about some of the key initiatives we've done in the last 6 months. One of the biggest initiatives going on in the company is digitizing India's auto industry. So we can go to the next slide, please. And this really comes from digitizing the entire journey of buying or selling a car. If you come to Valet today, and what our attempt is over the next few years is right from finding your car, selecting your car, choosing your car. We want you to be able to get a test drive booked online. We want you to be able to book the car online, get a loan instantly disbursed to you online, get a price for your old car online, which is a trade-in, and get an insurance policy line, and then have the car delivered to you. So we want, in a way, to create the entire journey of you buying a vehicle or selling a vehicle at the click of a button. And we are spending extensive time in digitizing this entire journey along with manufacturers, banks, and other stakeholders, so that the customer experience on buying a car is almost like buying a cloth item or any other item which they normally do on everyday purchases. So this is a project which we've undertaken for a few months now, and some parts of it already are done, some parts are underway. But the attempt here is to make sure that you can get a vehicle, or the journey of buying the vehicle is completely digitalized, so that the customer gets the best experience possible. We can go to the next slide. As part of the journey, the first thing we've done is really provide a fantastic buying experience for used car customers. So we've already started putting up Valet Absure stores. Now they're in 9 cities. What these stores do is have full certified cars and a certain look and feel for a customer to buy a used car and have a fantastic shopping experience. All the vehicles in these stores are listed on Valet as certified vehicles. They come with a warranty. They come with a full peace of mind. And the customers can come online today and get a complete digital buying experience. So you can come online, you can find the car, you can select the car, you can look at the report and the condition, you can choose the car, you can book the car. So we're trying, as a first attempt, to digitize the entire buying journey of the used car business. We put up these locations and put up these digital stores so that you can get a complete peace of mind and buying experience to buying all these high quality used cars. Can we come to the next slide, please? Yeah, this is the promise for the used cars. 7-day money back, so you can buy this car and return it back if you don't like it. Of course, the complete guarantee of it being a not tampered or zero accident vehicle. The cars are completely checked to make sure the condition is good, and they carry a warranty on it. So this is a real attempt at digitizing the entire used car business, and we're, as I said, launched in 9 cities so that you can choose a car, select a car, book the car, and then use the car with a warranty and with a full peace of mind. And if you, for some reason, do not feel, you can just return it, right? It's a very unique offering in the industry itself. So this is the first attempt at digitizing the entire buying journey of the new car and the used car industry. Let's go ahead, Vikram. What we've also done is digitize the loan experience, right? So today you can come onto Valet and you can, once you select a vehicle, a new car or a used car or a two-wheeler, you can put in your details, and we take out data from the credit bureau, send your data to multiple banks, so that the banks instantly, a process which is physical in the real world and takes a long time, can instantly give you a loan approval back. This is a product is already live on Valet and Bike Valet and all our platforms, and today it's probably the easiest and most convenient way of getting a digital loan. We believe that this is going to be a big part of our future. All these 34 million customers on our platform need a loan, and we're heavily investing in technology with banks and other stakeholders to make sure the customer gets a choice of multiple loans at the click of a button and instantly, right? We believe that this could be one of our larger businesses in the next 3 to 4, 5 years. You can go to the next slide, please. For this, we've already created we are looking to create India's largest auto loan marketplace. It is already one of the largest auto loan marketplaces in the country. Multiple banks, and you can see the list of all the partnership banks. All the leading banks in India are partners to us, and the thousands of customers today who can come in and get a loan of their choice from any of these banks or finance providers. Let's go ahead, Vikram. This is what we had today. What we'd like to do is now, after this preamble of 20-25 minutes, where we've talked a little about the foundation we've created, a little bit about our results, a little bit about the future, a little bit about some of the key products we're focused on. We're happy to go into Q&A and answer all the questions of all the participants. So we can probably stop sharing, Vikram. Or
Yeah, I'll do that.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. To ask a question, please click on the Ask a Question tab below the media player to send a question via text. Participants connected on the audio call may enter *1 on your touchtone telephone. The operator will announce your name when it is your turn to ask a question. Please unmute your microphone while proceeding with your questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Amit Pirani from JP Morgan. Please go ahead.
Yes. Hi. Thanks for the opportunity and for the detailed presentation. My question was actually more on the TAM that you laid out, the $14 billion revenue pool. Quite an interesting slide and helps us to think about.
Amit, may I request you to please use the handset mode? You're not clearly audible.
Hi. Is it better now?
Yes.
Okay. Yeah. Sorry. So my question was most. So when I see $6.5 billion revenue opportunity from vehicle transaction, is this what you can achieve, or is this the market opportunity, and then you will obviously have a certain high market share within that? And similarly, on the auto finance opportunity, I mean, how are you defining it? Because I think auto finance could be a larger number, unless I'm mistaken here.
Vikram, you want to take this up?
Yeah. So I think, can you hear me? Yeah. So the TAM is actually the overall market size, actually, right? And within that, we will have a share of that market size. It is not completely what we will do. That's the total market which is there, and we will have a portion of that. That's the way the TAM is defined.
Okay.
So secondly, on the auto finance part, I think it's a percentage of the loan book, which is part of the revenue opportunity for us. So it's not the GMV value. I think what you are looking at is kind of this GMV value. This is a percentage of the auto loan markets or the existing loans in the market in the auto sector. A percentage of that basically is what the banks and other people will make of it.
Okay. Great. That's helpful. And I don't know if you can share this or maybe give us some directional view on how the profitability of the various segments is moving, because I think Automall has been profitable for some time now, but I think we were seeing an improvement in profitability in the new car, used car space also. So some sense on how these are moving will be great.
Anisha, you want to take that up?
Sure, Vinay. So just to clarify, both our businesses have been profitable and for a very long time. And I know it's, so in fact, the results that we have uploaded will also have this, so I can definitely answer this. If you could look at the March numbers or the current numbers and you carve out SAMIL, both the entities have given those EBITDA margins of 28%. So it will be 27 and 28, but both have healthy margins. So it's not only SAMIL which is profitable.
Okay, great. Thank you. I'll come back.
Sure.
Thank you. Our next question is from the line of Vimal Gohil from Union AMC. Please go ahead.
Yeah, thank you for the opportunity. So firstly, if you could just probably highlight, we have Vinay spoke about three core businesses, which is the remarketing business, the new car business, and the used car business. Can we have some sense as to how much of these three businesses would be contributing to that 77 crore of revenue in this quarter?
Sure.
And the
Anish,
first
I
half,
can just
maybe.
take that. 57,
Yes.
about 57 odd percent comes from
56.
our remarketing business, which is helping consumers like
Yes.
me and you sell vehicles, big businesses sell vehicles to fleet owners and dealers. It's a C2B, B2B business, which is 57%. The rest comes from our core new car, used car, platforms where consumers like you and me can come and buy a car or sell a car, which is on Car Valet, Bike Valet, CarTrade, etc. All our platforms. So that's just the brief breakup of how revenues are structured.
Vinay, how this? Firstly, these numbers are for the first half or for the quarter, or how is it?
It's first half, right, Anisha? Am I right?
So the 77 number that he spoke about was Q2, where you're absolutely right. 56% is SAMIL. For H1, it is about 54%, but it's always been in the same range. So both H1 and Q2, to answer his question, would be at the range of 56 and 54, coming from SAMIL business or the remarketing business.
Ma'am, would it be possible to break this old car, new car business further? As in, how much is contributed by the new car? Because I just want to understand the potential. The new car business where where there is a potential to increasing ad spends by most of these OEMs. They are going to increase their digital ad spends and in line with what is happening globally. So maybe just wanted to understand how much of our revenues is coming from there.
So it may be difficult to split it, but what I can tell you is the larger part is the new car side. I think what we found over the last 8-10 years is the new car monetization has taken probably the first step, in this whole automotive digital industry. So the new car part is the larger in it. We can't obviously split the new car, used car side.
Fair enough. In the first half of FY22, and did you see OEMs sort of pull back some of their ad spend, which also impacted you guys? Any sense that you can give? Because what I have been hearing and what we've been reading is that while ad spends are down, there have been cuts on the traditional channels, which is maybe television or newspapers, etc. But the ad spends are probably holding up, at least as far as the digital mediums are concerned. So a comment over there will help. Thank you.
Sure. So the revenue growth of the company is 46%. So obviously the answer, and across all businesses, there's significant growth. So I think the answer that the OEMs have spent with us is obviously correct, because the revenue is grown by 46% of the company. I think the way to answer this question is that there is generally over a long period of time a shift from offline media to digital from car manufacturer and industry as large. That shift, I think our RHP said it's about 13-14% of all spends are digital. We believe that over, in many other countries, in the US or other places, it's almost 35-40%. And there's a trend that car manufacturers and dealers will spend more money on digital over the next 3, 4, 5 years, like it's in most developed markets. The way we see this, in the last few months, some of this has got accelerated because of just the COVID impact and behavioral change of consumers who now more than ever come or use digital as a first form of any purchase process, right? And that is driving, if you see our traffic, that's driving our highest ever traffic as well last quarter. So I think we've seen those trends. Obviously, we as a business would like it to be far more than and more acute. But yeah, these trends it's a long-term secular movement towards digitizing across the board in the industry.
I was going to say that I would have loved to say that 46% is after the cut. But the fact is, we've not seen any of these cuts. I mean, we've seen a healthy growth of 46% in our business.
Right. Thank you so much, ma'am. All the very best. Thank you.
Thank you.
Thank you.
Thank you. Our next question is from the line of Ding Vico from East Spring Investments. Please go ahead.
Yep. Hi. Thanks for the opportunity. Could you give us a bit more clarity on the nature of the inventory of the auction business? I have been to the SEMA website, and it appears that whatever's listed shows that the bulk of inventory seems to be CVs. Yet at the same time, I understand, from the auction business, maybe only 25% should be CVs. I'm wondering, where is this, non-CV inventory being listed?
I don't think we got the second part of the question, but just to clarify, our auction business of 1.2 million vehicles got a mix of CVs and passenger cars and other products. We are very bullish on the commercial vehicle industry by itself. I think the document, even our RHP shows that approximately 1.5 million commercial vehicles or used commercial vehicles are traded every year. In Shriram Automall, we have a very unique experience opportunity, I would say, to tap the entire used commercial vehicle market. So it's something we're very excited about. It's it's not in percentage terms, it's a smaller part of our total inventory, but something we're trying to invest behind and focus on for the future. We do believe that we can be a significant used commercial vehicle auction player. We already probably the leading player, but to become a significant in the next few years. It's for us an area where beyond passenger cars, it's an area for us to focus on. Obviously, passenger cars is probably the leading area for us as far as auctions or our B2C businesses. But really, when we go forward, we like to focus on the used commercial vehicle industry as well, and make sure that 1.5 million used commercial vehicles is something we can make a big dent in.
Could you? Thanks for that. I mean, that answered the first question. Thanks. On the second question was that I have visited the SAMO website, and it seems that a lot of the inventory being listed there are for CV inventory, such as for Ashok Leyland or Tata CVs. So I'm just wondering, where is this non-CV inventory coming from? Is there some kind of integration with the main Valet platform?
I'm just going to answer. Yeah, one thing is we have CarTrade Exchange also as an online platform where vehicles are listed. So it's not only the SAMIL website. When I go ahead.
Was the question that where does a non-CV inventory come from? What is that the question?
No. He's asked. I think he's trying to see it on the site. When I think on the website, he's trying to figure out where the stock is appearing.
No, it's listed in different platforms. So, but the CV, but the inventory on Shriram Automall and its subsidiaries comes from. It could come from dealers. It could come from consumers like you and me. It could come from fleet owners. It could come from banks which have repossessed inventory. It comes from insurance companies. It's a very long tail of consumers and business sellers.
So this non-CV inventory, is it being listed on another platform, or is everything being listed on?
It will be on all platforms. It will be CarTrade Exchange. It will be on Shriram Automall. Both of them, I think. Am I right? That's correct.
Right.
Okay, and just Shriram Automall alone, would it be mainly CV?
No, it's a mix of all products.
Okay, and the split would be around the same. 25% of it would be CVs, and the rest would be non-CVs.
We're not able to give an exact percentage, but it will be in a range of that. Commercial vehicles would be would be that range.
Okay, thanks. And could you comment on the kind of integration and synergies that this auction platform has with the used car, new car core platform? How does this integrate with the core part of the business?
So we have a large number of sellers coming on Valet to sell their car, as you know. And one of the things we're working heavily in terms of synergy projects is how do we seamlessly get a customer to list on Valet and auction the vehicle on Shriram Automall. It's a project which is underway, and that's one of the reasons why we acquired Shriram Automall a couple of years ago. And the synergies across the consumer seller on Valet and the auction systems on Shriram Automall. What we've gone one step further, and it's in the RHP as well, is with manufacturers we're targeting and doing the same thing, which is if you look at MG Motors, which is one of our partners. So what we're looking to do is any trade-in vehicle which comes in there is also auctioned back on Shriram Automall. So we're finding different sources of supply to Shriram Automall, which is the growth of these vehicles of 1.2 million run rate. is coming from consumers from Carvale, which is integrated to Shriram Automobile. That will provide for future growth because that integration is underway. And the second, of course, is time when manufacturers and dealers also supplying cars or passenger vehicles into Shriram Automall auctions. But yeah, these are all supply sources for us. People selling on Carvale also have different needs, right? So somebody selling on Carvale wants to buy a new car and do a trade-in as well. So it's possible they might go into a new car dealership. Somebody selling on Carvale also wants to C2C transaction and sell to another consumer. So the consumers are categorized into various things, but one of the projects we're working on from a synergy standpoint is to make sure if you sell on or looking to sell on Carvale and you want the best price from a dealer, is how do we seamlessly auction it out on Shriram Automall.
Okay, thank you. Sorry, I just have one more question, which is, could you give more clarity on the development of the franchisee business? What's the roadmap and timeline in terms of store expansion?
Sure. This is a big part of our future expansion, and I think it comes from how do we seamlessly make a used car available online for you to buy with all the peace of mind you need to buy the vehicle. So that involves multiple things. I think the first part of it is the digital buying experience, which means your ability from a technology standpoint to come online, find the car, select the car, book the car, get a loan online, etc., etc. Because a large percentage of these customers want a digital loan as well. And then once the loan is instantly disbursed, how do you make sure the car is instantly delivered to you or you can pick it up? And the logistics of that is managed. It's a seamless end-to-end experience of buying a used vehicle online. Part of the physical side of it, which is making the vehicle available to you, the logistics of it being delivered to you or collecting it, is about putting up locations across the country. And we're now in 9 cities, we put up these locations so that you can seamlessly pick up the vehicle or the vehicle can be delivered to you. And of course, the availability that this vehicle carries a full warranty from Carvale and a guarantee in a way because you can return it if you don't like it, right? So this is, as far as we are concerned, a very critical part of our used car side of our business, the B2C side. Big expansion planned, the next few years. As I said, we're already 9 cities, but this is rampantly, to the rampant growth and development going on here. I think it'll be one of our faster growing businesses in the next 2 to 3 years, I think. But there's huge focus of the organization making this used car seamlessly online available to you, when you want to buy it on Carvale.
Okay, thank you. That was helpful. Thanks.
Thank you.
Thank you. I would now hand the conference over to Nishit for the chat questions. Over to you, Nishit.
Thank you. So we have a few questions on text box. The first one from Rajesh Pednekar of BNP Paribas. He's asking, could you provide a segmental breakup of website services, commission income and used car sales this quarter? And how do you see it pan out for the full year? We have similar question from Shyam Sundar also, who's asking the breakdown of standalone revenues between the new and used car business.
I think we answered this a little earlier. 57% of our revenues come from our C2B, B2B auction business, and the rest comes from our B2C side of our business. That's a segmentational breakup. On the B2C side, the larger part is new, but we're not at this point able to give a breakup between the new and the used car side of the revenues. Anisha, you want to add on to anything out here?
Yeah, when I even the adjusted EBITDA, the composition is similar. So we have 56% coming from SAMIL, the rest is a standalone entity.
Okay. We have another question from Rajesh Pednekar. How are the unique views calculated? Is it based on a page clicks tab, or is it per visitor regardless of how many pages they click on?
Yeah, Vikram, I can answer, and then you can just add on if you like. This is actually unique customers or unique visitors per month. If one person clicks 5 times, then it's counted as 1, not 5. So this is unique customers. So 34 million is unique. It's not visits, as we call, or number of visits or page views. This is just number of unique people. Am I right, Vikram?
Yeah, I think Vinay is correct. It's tracked by Google Analytics, basically. Google Analytics understands when a customer comes once in a month and tracks them as unique, basically. So it's not page views or it's not hits. It's basically a unique visitor coming to a website in a calendar month.
Just to add to that, another point, because 88% is organic, it's not that someone has come to just click for seeing the site, right? They're genuine customers who have come on the site.
Sure. So we have another question from Ashwini Agarwal. His question is on the franchise business. Regarding AppSure, what is the business model? Are we buying those vehicles from sellers and investing money in it? How does it work for us?
Yeah, AppSure outlets their franchise stores. So dealers buy vehicles, invest in that, and refurbish them to our standard, and then we certify these vehicles, check these vehicles, put up a warranty and a money back guarantee, and then put them up for sale on carvalet.com. So it's an end digital experience, to the customer. We've tried to, as a company, stay asset light, where we don't own the store and the infrastructure at all. The dealer puts that up, and we, of course, on sale of these vehicles, charge a transaction fee to all dealers, which is very high margin business for us. So it's a complete. It gives customers a complete digital experience to buy a vehicle online and then have it delivered to them with complete peace of mind. It allows our dealer to be, it allows to ramp up fast because we've chosen a franchise way of rolling this out. So we're already in 9 cities. And also, it provides, it's a model where we make high margins and the dealer as well stays profitable. I think that's the way we've thought about it.
Sure, Vinay. Vinay, one related question on franchisee business from Garima Mishra of Kotak. What targets do you have for the franchisee business in terms of revenue sold? What is your revenue model here? And do you offer any kind of financing to dealers opting for franchisee of AppSure?
Yes. Okay. Good question. We charge a percentage of the selling price as our revenue. As I said, that's high margin business for us. Our targets in this business are around, obviously, number of cities, number of locations, volume of vehicles sold. These are internal metrics. Revenues from these vehicles. These are all our internal metrics. And do we give working capital? In some cases, we are starting to explore if the dealer needs money, whether we should be lending money or giving money for the transaction or buying or selling the vehicle on behalf of the dealer. So that process is the pilot underway. We haven't taken a firm view on it, but in a case where we got a very good dealer who might need working capital, we're exploring the possibility of arranging or giving him the working capital or her the working capital required.
Sure. Another question from Garima of Kotak. How long do the vehicles stay on the auction platform? What happens when vehicles fail to get sold?
On the auction platform, vehicles can differ. It can be a 3-hour auction. It can be a 3-day auction. I think it just depends what the seller and the seller type wants. When the vehicle does get bid, it's a binding bid. So the person who's bid on it needs to pay for the vehicle and lift it. Many of us buyers, or most of our buyers, carry deposits lying in the company. So if buyers or dealers who are regular buyers on the platform do not fulfill or do not agree to buy the vehicle they bid on, of course, their deposits are lying with us, which we can forfeit and pass on to the seller.
Thank you. Our next question is from the line of Sagar Parekh from Deep Financial Consultants Private Limited. Please go ahead.
Yeah, hi. Thanks for taking my question. So my question earlier was actually on this revenue split only. So just to understand it more better, so this 57% you're saying is the remarketing business is largely the commission or the broking income, right? Is that a fair understanding? And the remaining is all advertisement-driven income.
That is correct. I think the income in SAMIL is transaction commission income. That's correct.
Okay, and the remaining is all ad driven. So 43% of
for
your
manufacturers and dealers.
Yeah, correct. Okay, understood. And my second question would be on this on your P&L. So there is this line item of interest expense of 7-8 crores every quarter. So is that related to Ind AS accounting? Because I believe we don't have any debt on our books, right?
Yes.
That is correct.
Absolutely.
Okay, so this Ind AS accounting, so why would there be an interest? Do we have like any rental charges or anything which goes into interest, or
Yes. So
how should I look at it? Look into this interest topic.
Sure. So you're absolutely right. The office premise and the auto malls that are on rent, both put together form part of these leasing contracts. And under Ind AS, the leasing contract needs to be accounted in a way that we create an asset, which is the right to use that asset. And on that, we have to charge the interest, which is the finance cost. So it's just an accounting treatment.
Okay, so if I have to adjust that, then the entire 7-8 crores goes into other expense, right? So then the EBITDA is lower to that extent.
Yeah, correct. you could do that, but the India classifies it as a finance cost, which is why it's lying over there.
Okay, sure. That's it from my side. Thanks.
Thank you.
Thank you. Our next question is from the line of Jeetu Punjabi from EM Capital Advisors. Please go ahead. Jeetu Punjabi, your line is unmuted. You may please go ahead with the question.
Yeah, hi. Thank you so much. So, Vinay, thanks so much for your explanation on how the last quarter has gone. So, a couple of questions. If we were to kind of see the current new car market's been pretty slow and chip shortages on the other regions. If you were to see a normalization of that and the normative growth that you've seen in the Indian car market, what do you think the 5-year growth trajectory for the space you're in will look like? I'm not necessarily asking you for guidance on what you'll grow at. I'm just saying, what do you think if you were to extrapolate what other people have done internationally at the digital space, gain share, and all the other trends that play out concurrently? How do you see the growth in the opportunity?
Let me try and give a broad answer. One is that, India's car industry or the automotive industry, as we showed earlier in the presentation, is likely to be the third largest auto market in the world in the next 3 to 4, 5 years. I mean, India is 22 cars per 1,000 people. The penetration is extremely low. So obviously, there's a huge belief that the penetration of cars per 1,000 people will go up. And obviously, in the next 5 to 6 years, you should see a massive growth continuously over a long period of time in the automotive industry. And similarly, India is the largest two-wheeler market in the world. So that's one part of the answer. The other part of the answer is that the digitization of the auto industry, which is the second big driver for businesses like ours. India is at a very early stage of digitization, in the auto industry. And actually what's happened in the last 2 to 3 years, consumer behavior has changed, where consumers have come online to shop or look for their cars or find their cars or buy a loan, etc., etc. But monetization of the industry or distribution of spends in the industry have not kept pace. I think today barely 12-13% of all money spent by manufacturers, dealers, and stakeholders is on digital. The bulk is still on offline media and offline transactions. And I think that in a lot of developed countries is probably 3 times or 4 times, 40%, 35-40%, the range we've seen. We feel over the next 5 years, 2 big trends. One is, of course, the auto industry is bound to grow. And the second thing is the digital allocation of spends by dealers, manufacturers towards transactions or other stakeholders, banks, etc., will go up. And these two are the big driving forces naturally for all businesses like ours, because when you have a combination of digitization and spend on digital and the industry growing, I think those are the drivers for the industry as a whole.
And do you put a number to it? I mean, in the sense that do you think that this can grow at 30%? I mean, the opportunity size?
I don't know whether Red Sea has laid that out, Vikram. Did they lay out at what the digitization pace of growth is in the industry report?
Not really, Vinay.
Yeah, I think they've just said that India is at 12-13. I think the US is at 35-40 and Europe is at 35-40%. So if you look at India at 12 and then at 35, I mean, just the pace of growth, it should be reasonably strong.
Okay. The second question is more a technical one. The ESOP charge that came in, which is a non-cash charge, is that going to recur next year as well, or is it just?
It's till March 31st.
Quantum, right? Obviously.
It's till March 31st.
It will affect only this financial year.
Correct. And so it's not like it's going to keep coming every year in such quantums. That's the question.
No.
The third question is, in the used car business, is there a rollout plan that's substantially larger than where you guys are running at right now? And do you think that in 3 or 5 years could be a significant part of the business?
So let me answer that. The used car business is already a significant part of our business. 57% of our revenues come from our C2B, B2B business, which is completely used vehicles, which is the auction business, where consumers like you and me and big businesses sell to dealers and fleet owners. It's a completely used vehicle platform. where 57% of revenue comes. The balance comes from Valet and CarTrade are consumer platforms where you can buy a new car or used car, and even that has a significant used car element in it. The larger part is new cars, used cars is significant. So if you look at our revenues, obviously we are mostly a used car revenue business, right? Number one. Then look at the future. We believe the same source of revenue today, the next 2 to 3 years, will be significant for us or significant parts of our revenue for the next 2 to 3 years. But if you look at a long period of time, maybe 3 years to 10 years, there are multiples. Not only the used car revenue growing or a new car revenue going to grow, but other streams of revenues which we're working on, whether it's financing, insurance, transactions, etc., will become significant for us, right? Our attempt is, as I said, organically keep growing our businesses like we have been. You've seen the organic growth of 46% in the first 6 months. But inorganically, look at opportunities around, value-added service like financing, insurance, or car servicing, repairs, accessories. And really, a factor of our next 3, 4, 5 years or the longer term is a factor of not only organic growth but inorganic growth through value-added services and other services and new age businesses which we want to invest or acquire.
Okay, super. Thanks for that. Appreciate it.
Thank you. Thank you for the question. Thank you.
Thank you. Our next question is from the line of Vijit Jain from Citi. Please go ahead.
Yeah, thank you. Thank you for the opportunity. Hi, Vinay. Hi, Nisha. So just a couple of questions from my side. On the new vehicles business, can you talk a little bit about, two things. One, the new product development initiatives that may be underway. And second, we've recently seen, OEMs like Mercedes-Benz try out direct-to-consumer type of a direct retail model. Do you see that increasing, and does that benefit you, impact you in any way? That's my first question on the new vehicle side. And the other question on the new vehicle side is, do you think the new OEMs that are emerging, especially in the EV side, etc., we've seen this in China where the marketing spend allocated by the new OEMs is much higher versus legacy OEMs. Do you see that trend in India in your businesses as well? And I have other question on used car, which I'll just follow up after this. Thank you.
Sure. Thanks, Vijay. I think the first part is the new product initiatives and on the new car side. So as we talked in the presentation, we are working hard on really digitizing the entire journey of buying a car, which includes new cars, right? I think our whole objective here is, which is if you come online, is how do you find a car, select the inventory you want of any type of car, get a loan instantly disbursed to you from any bank you like or any bank you are preferred customer to. How do you trade in your old car and get instant price? And how do you get the new car delivered to you, within an hour, right? And obviously, one part of this is about integration deeply with banks and building technologies with them. Part is about booking online. Part of it is about, in the future, even getting registration done online, because there's a government or a regulatory angle here as well, right? But we are working heavily on digitizing the entire journey of buying a new car. And we're working closely with all stakeholders and building technologies. And for some of these stakeholders, as I said, we're building technologies for them as well. So that's a big part where we're saying, listen, not only can you select which car you want, or not only you can choose which car you want to buy online, but you can complete the entire journey of owning or buying the car, whether it's a loan or a booking or an offer on the car online, right? Which is almost like creating a complete shopping site for a new car. That's a project which is close to us and we've been working on for a few months, and we'll continue to work on continuously. The second part is what is Mercedes and some of the other manufacturers who are selling directly or now invoicing directly. I think what Mercedes-Benz, to my knowledge, is doing is invoicing the vehicle to the customer directly and controlling the inventory. But really, the dealer is the place which controls the entire experience of selecting the car, finding the car, or delivering the car to you. Although the vehicle is directly built by Mercedes-Benz to you. So I think it's an attempt to make sure that the inventory is centrally controlled by Mercedes-Benz. To us, I think, whether it's Mercedes-Benz model or a more traditional distribution model through dealerships, I don't think it matters too much. We are really in a platform where all our 34 million customers, we want to integrate Mercedes-Benz so that they get the vehicle online and booked online, or we want to integrate with a dealer, or we want to integrate any stake or a bank. But it doesn't change how we think as a business. Clearly, the more digitized a process, by any manufacturer or dealer, the greater the benefit to platforms like ours because the customer's offering becomes better and better. Our attempt is to push every manufacturer and every dealer to digitize the entire journey so that we can incorporate that for all our 34 million customers. And I think this is underway. COVID has accelerated behavioral change of all stakeholders. So this is getting accelerated in India and everywhere in the world on digitization. And the last part was, do manufacturers or newer manufacturers spend more money? I think generally you would find that manufacturers who are looking to build a brand spend money, whether it's newer or older. I don't think it really matters. It's really about who's spending money on how much they believe in digital, how much they believe in creating a digital brand, how much they believe in spending on brand at all. So I think all these factors matter. I don't think new or old matters.
Got it. Thanks. My next question is, could you give me a sense of within the B2C business, what part of it will come from dealers versus from OEMs? And I know you've answered a big part of the revenue split question earlier, but if you can help understand, are new vehicle dealers a big part of your business at all, or should we think about that business as OEM ad spend and second used car dealer ad spends?
No, dealer is a significant part of our new car business. The manufacturers revenues are larger out of the B2C side, but dealer is significant too. I think we've seen that in some other markets as well, that it starts in manufacturer spend and dealers, is significant, but over periods of time, dealers, percentage of their total spend to digital are much higher because, if you look at the market by itself, if you're a dealer in India, to spend money, digital is probably the easiest way to spend money just because it's, transaction driven. It is more direct to your direct customer and more specific. Also, offline advertising channels are not easy for dealers. Television is very hard for them to do. Print is expensive. So digital tends to be the way the dealers accelerate their spends. And we feel in the next 4 or 5 years, all the manufacturers, the larger part, dealers will keep up pace and catch up there, right? I think, or maybe even go higher than manufacturer spend. That's how the breakup is really.
Sure, thanks. My next question is just a few more questions. So one is within the used car business, have you seen any higher interest from a consumer point of view in the last 6 months, especially since the capacity constraints on the new car side have been high, and we've seen this in the US and in other geographies where a non-availability of new cars is kind of taking used car pricing up, and a lot of interest in used cars have also gone up. So that's part one. Have you seen that from a customer point of view, from a traffic point of view, a shift towards the used car categories? And the second question is, on the offshore model that you have, do you think your marketing spend will necessarily have to go up from here, given that you would be pushing the pedal on this used car transactions business? And how should we think about marketing spend from a going forward basis? And I'll just add my final question to it. Could you give me your current dealer count on the used car business?
Sure. So the first two parts is, around marketing spend and used car market itself. The demand for cars generally post this lockdown seems to be strongly back. As I said, 34 million customers a month come, whether it's new cars or used cars. There is a new car general supply constraint. It's been in September at least, we can see visibly. The demand for new cars and used cars, in my mind, both in the last quarter has been reasonably strong. Supply has been an issue for new cars. Do we need to spend more money on marketing or AdShore marketing? CarVale, AdShore is CarVale as a primary brand and AdShore as a peace of mind brand. 34 million customers a month come to these platforms. That's 3.4 crores. I'm not sure whether we spend more money, how many more customers can we bring? But 34 million a month, 87% organic. It shows the affinity. So we don't feel, of course, we continue to do our digital advertising to bring 13% of our traffic, and we continue to do that. We don't see any significant change in our ad spends, coming in. And we don't need to, as I said, because 34 million customers still come every month. We need to serve them. This is as you know, as you've seen the traffic over last 6 quarters in the presentation, we are highest ever traffic with our current spends. If you look at the traffic over long periods of time, it's growing rapidly. If you look at the organic part of our traffic, that is growing. If you look at the Google trend scores, we're strong. So, whether it's brand affinity, whether it is traffic growth, whether it is absolute traffic, all of it seems to be in line. So we don't see any significant need to increase ad show spends, number one. The number of breakup of used car dealers is not a metric currently, which we are able to give out. Am I right, Anisha? Is that correct? Was that the question? Number of used car dealers? Is it? What we can say, the actual outlets are in 9 cities. I think that's what we're saying.
Thank you. We'll take our last question from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Hello. Yeah, good morning, and thanks for the opportunity. Sir, my first question is on just a clarification on this Appshore franchise business. Is this the extension of C2B, B2B business or the consumer-driven piece? And what is the size of such showrooms, and who bears the cost when some vehicles don't get sold to such franchise?
So this is an extension of the consumer side of the business. It's where consumers can come to Valet and book a car online and select a car and find a car. So it's an extension of really a B2C new car, used car businesses, primarily B2C used car business. It's really digitizing the entire journey of buying a car online, right? And making sure you can get the car with complete peace of mind. And the second question was, sorry, I just didn't hear the second question clearly. Could you just repeat the second question?
I mean, what are the size of such showrooms? How much they accommodate in terms of number of?
It differs. It just differs. I'm not sure, Vikram. Would the Bangalore one versus it could differ from 500,000 square feet to 5,000 square feet. I'm not sure. You want to answer that question, Vikram?
Yeah, I mean, it differs depending on the city, depending on the kind of dealer, depending on the location. It differs from dealer to dealer. But these are high quality dealers delivering high quality vehicles to our consumers.
Related question was, who bears the cost when such vehicles are not sold, maybe from some such franchise?
Sorry, yeah, I forgot to answer that. The dealer is responsible really for making sure that the vehicle is purchased and sold.
Okay. My second question is on. Would you be sharing data on this is for a consumer related business, on the number of lead generations for sellers or the number of dealers using your tech-based products, tech-based services? I think some of it was mentioned in RHP indicatively, but would you be giving this data in future?
We normally, the key metrics for the company is the number of the traffic or number of users, which is 34 million unique customers a month, or number of vehicles auctioned or revenues in EBITDA. So those are the kind of data we've been bringing out in the RHP, and I think the quarterly earnings also been very consistent with the metrics, which are the key drivers of the business in relation to the RHP.
And just to answer this
question, do you come to know the transacting user?
Sorry, I was just going to add to your question where you asked how many of the dealers are using the software. The fact is that it's all integrated. So we have created the backend software. So whenever we transfer or share a lead with the dealer, it's not over an Excel or an email. It is pushed from our system to their system, which is built by us. So everybody uses the system or the software that is built. So we are connected to every dealer through a system that has been built for them.
No, I mean, we mentioned some data of we have some 5,000 dealers in India, and some of them are penetrated for us, and some of them are not. So that from that perspective, I was asking.
I think you're referring to the industry report of what Redseer wrote of how many used car dealers are using online service and how many. It's not kind of from our section of that. It's an industry report section actually.
Okay. And do we come to know how many of these 34 million customers do transaction on the platforms as well?
We do track on our systems from the 34 million how many put in leads to dealerships and how many or some estimation of how many would buy because it does get recorded in our systems. That's correct. It's a funnel.
Okay, and one last question, you may choose to not answer. Why do you think some of your non-listed peers are getting valued much higher than our current valuations? I mean, is there anything which they are doing which we are missing?
Hard to answer. As I said, I don't know the reason.
No, honestly, there's a question in our mind because I think what they are doing is part of what we are doing. Our ecosystem carries exactly what they do. So we have C2B, B2B, all of it. So it's a question for us. I think we should be, again, I'm not sure whether we can say this, but we should be 3x of the valuation for sure. So it's a question that is there in our mind too. But
But their
we can just
business
say that
model
we
might be
ensure that we are
different.
doing the
Like
right thing.
their business model might be different, like inventory model or the model which we have. Is this something which is very different and perceived very differently?
I think the way to answer that, we are building out an automotive ecosystem where we really are saying this: if you're a customer, you can come and sell a vehicle, buy a loan, all of it on one platform. I think some of them are building one part of their business, not the entire ecosystem, and that's where we're different. If you look at the brand affinity scores, you've seen the differences. If you look at the traffic scores, you've seen the differences. But you look at the profitability metrics, adjusted EBITDA, or there's a difference there as well. So I think what we've tried to do is stay focused on our business, focus on the ecosystem. As you know, we're the only listed company as well. All the metrics we have reported, and we're the only listed business among all these competitors, and that may be some idea of why we've been able to list versus others, right? I think that may be also a question mark, but yeah. I think our focus is really to stick to our core business, grow it in a healthy manner, 28% EBITDA margin or adjusted EBITDA margin. So just stay focused on our business and grow and build over long periods of time what we want to create. Really building this automotive digital ecosystem. I think that's the way to think about it, and not worry about valuations at this point. I think it's really about, and definitely not competitive valuations. It's really about creating a certain customer experience for us, right? And really making sure that we achieve our goals of giving the customer the best experience in the journey of buying a car or selling a car.
Thank you. Thanks for all the responses and keeping up all the details.
Thank you. Thank you.
Thank you.
Thank you, everyone.
Ladies and gentlemen, that would be our last question for today. I now hand the conference over to the management for their closing comments. Thank you, and over to you.
Thanks everybody for joining in, and it's our real first earnings call. I hope we've been able to answer as many questions as we can, and transparently come across and explain our business to you. We are really excited about the business going forward. Even the last quarter or the last 6 months, we've achieved our 46% growth, 104% EBITDA growth, adjusted EBITDA growth, and we feel that the next long period of time, India is at a cusp of digitization. We are really trying to contribute in the auto industry to get it digitized and make sure our customer who's coming to buy or sell a vehicle, benefits from getting a fantastic shopping experience. So that's all I want to say, and thanks again for joining in.
Thank you very much.
Thank you, everybody.
Thanks. Thank you. Ladies and gentlemen, on behalf of Access Capital Limited, that concludes this conference.